Good evening, everyone.
Good evening, sir.
Let everyone join in.
Good evening, sir.
Good evening.
Happy evening, sir.
Happy evening. Okay, wait, let me share my screen now. Yes, good evening, Shravanya. Good evening, everyone. I think people are yet joining in. Let them join. Okay, so we have to do Nostro Vostro today, right? Okay, has everyone joined in? Can we start off? Let's do one thing, friends. Let's swallow the big frog first. We have an atom bomb question to be covered. Question number 12. Just read, get a feel of the question. In 1 minute, we will start doing it. And then I will go to the concept of nostro vostro. Shall we start doing it together now? All right. So on 10th July, an importer entered into a forward contract with bank for 50,000. So friends, my first question to all of you, I think today is July 19th, is it? My first question to all of you, as an importer, what will I do? Will I be buying dollar or will I be selling dollar?
Buying dollars.
Buying. I'll write down since importer has payable, he will buy dollars. Okay. What is the dollar is going to buy? $50,000 buy due on 10 September. Due on September 10th. All right. At what exchange rate? At 66.84. Now they are saying bank covered its position in the interbank market. What do you mean by bank covered its position?
Bank is buying dollar. Market.
Bank covered, we'll just write down like that, covered its position at what rate? 66.68. Okay. Now let's come down. They are asking how will the bank react to the customer if on 12th September, friends, when was he supposed to come? 10th September. Am I right? But the customer comes on what date? 12th September. What does that mean? 2 days after the due date. Everyone tell me, as per FEDI rules, maximum how many days can you hold back?
3 days.
3 days. Okay, but 3 days. But he has come back within 2 days. So bank will not. Wait. Can you please mute yourself? So bank will not blacklist this fellow, but the bank will punish him. This table is very, very crucial, friends. They have given the spot rate on 10th September and spot rate on 12th September. First part is easy. So I'll write down over here. Spot rate on 10th September. Or maybe I'll, okay, how much is the spot rate on 10th September? Everyone tell me. 66.15.
Or 1 second.
66.17. Am I right? All right. Then they have given the spot rate on 12th September.
65.96.
65.96.
Or
65.99. Okay. Next part is challenging. What is the meaning of this one sentence? Arjun, it's the first question. You didn't miss anything. What is the meaning of this sentence? Spot bar September means what?
Is it the forward rate?
It is actually the forward rate, but they have used the word spot bar September. Are you clear with this part? Okay, so you write down over here. It is the forward rate for September on what date? 10th September. How much is the rate that they are mentioning over here? 66.2832. Same way, they can also give you forward rate for September on 12th September. Am I right? How much is the rate told over here? 66.12 slash 66.18. Now, next one more I will tell you, so you will understand the logic of the remaining. What is the logic of this one?
Four-month forward rate?
Forward rate for October. But on what date? 10th September. Okay, so even if you don't unmute, please keep on talking with me, otherwise you will get confused. On 10th September. How much is that? 66.41? 66.43. Okay, so now tell me, what is the meaning of this one thing?
Forward rate of October.
12th September.
Forward rate for October on what day? 12th September. How much is that?
66.25.
25 slash
33.
66.33. Now, next one, you tell me, what is the meaning of this?
Forward rate of November on 10th September.
There's a lot of disturbance. Is there some fan running behind you? I don't know who's speaking. Suddenly becoming very as if, some wind has come. 66.61. Yes, next one.
Forward
Next
rate
one.
for November.
Forward rate for?
November on 12th September.
I think now you have understood the grip of the exchange rate. So once this part is easy, then the question will look easier for us to crack. Can you write down till here and understand thoroughly till here, friends? All of you. Are you all done writing, friends? In the meanwhile, friends, mentoring session is starting next Monday. I'm making a study plan for the students. Okay, so I'll share a WhatsApp group with all of you. I prefer all of you also attend. It's free. Initially they told they were charging, but now they have made it free. So you all can attend this. Okay, it will help you all a lot for the exam. You've already done the assignments, many of the things in the class, so you don't have to redo that. If assignments are there which you haven't done, that part you can do it. So you will get one more exam there. This Sunday you have an exam. Okay, all the best, friends. Question paper is ready. I have got it.
Thank you, sir.
Thank you so much.
Sir, how many marks?
That I have to check. I think it's 50 marks is what we have kept. Only that's share valuation chapter. No, questions are limited on that. I think 50. Let me double check that part. I'll get back to you.
Sure, it's not 4 chapters: share valuation, bond valuation, and then the risk management, security analysis.
Saraswati, I think it's better you mute yourself. There is a lot of disturbance behind you, so the whole I'm not able to hear only. It is on share valuation, bond valuation, security analysis, risk management. Saraswati, sorry, can you please chat in the chat box? I think there is you are traveling somewhere. I think so because that's why it's so noisy. You're not traveling, is it? So I think fan is directly on your mic in that case. Just move your mic a little bit and speak. That will be better in that case. All right, all right. Arun, it's suddenly getting very high disturbance is coming here. That's why I told you that. Okay. Yes. Please write down this. Let me check for how many marks the question paper is made. Are you all done writing, friends?
No, sir.
Please write down. Done, friends? All of you? Yes. Can I go to the next part now? All right. So I think once you are done with the first basic data, okay, I will take a fresh page to explain this to you with the help of a diagram. Is an importer or an exporter? Everyone tell me.
Importer.
Okay. What is the original date, first date?
July 10th.
Okay. So you have July 10th and there is a due date of, if I'm not wrong, September 10th. Am I right? But he didn't come on September 10th. When did this fellow come back? He came on September 12th. All right. Okay. So I'll just put a diagram. So here I'll write down July 10th, September 10th, September 12th. All right. On September 10th, he's an importer. Will he buy dollar or will he sell dollar? Will buy
Buy dollar.
$50,000 at what price?
66.84.
Okay, 66.84. That is equal to how much, friends? How much is 50,000 into 66.84?
33 lakh 42,000.
33 lakh 42,000. Friends, hold on. Even before I do this, here I have forgotten to give you two more basic data. Have they told that the exchange margin is 0.1%? This is the commission on buying and selling. Exchange margin 0.1% and interest on outlay of funds. 12%. Can you write down this also? Fine, friends. I think you're done. Okay, now here they have buy $50,000 on 10th July, correct? He was supposed to come on what date? September 10th. Did he come on September 10th? No. Instead, he came on what date? September 12th. So tell me, friends, if someone does like that, they will be charging them three charges. What are the three charges they will levy from him?
Exchange rate difference, swap
Exchange
loss,
difference, swap loss,
interest on
outlay of funds. How that is done, I will explain to you. First, you draw this diagram in your books, all of you. Are you all done? Anybody is not done, please let me know. Done, right? Okay. Now, friends, ready. Listen very, very carefully. All of you put your pens down. Now, I want you all to focus. All right. What date did the importer come to the bank? September 12th. What day was the importer supposed to come to the bank? September 10th. Okay. So, what the bank is saying now is, see, you should have come on September 10th. But did you come on September 10th? No. So the bank says enter into a backdated transaction or enter into a transaction that will happen on September 10th as if you are extending the transaction to September 12th. After that, you cancel it again on September 12th. I'll write down and explain this to you. That will be better. Okay. Since the customer has come on September 12th, he will be asked to do a backdated transaction on September 10th to extend the contract to September 12th, and after this, it can be permanently cancelled. Can you write down this in your books now? All right, friends, are you all done writing? Sorry to interrupt in between. Exam is for 75 marks, okay, first one. Next one will be for 100 marks. Portfolio, mutual funds, etc. We will put it for 100 marks. All right? Yes. So all the very best, friends. Do well. Okay. So now what did I say over there? Enter into a backdated transaction on September 10th to extend the contract to September 12th. Now tell me on, wait, Srividya still writing? Sorry. Please write down.
Done, sir. Thank you.
All right. So tell me now, how will you extend the contract to September 12th? We have learned about extension of forward contract. Am I right? How will we do it? How do you extend the contract to September 12th? Come on, tell me. First, what will we do? First, we will cancel the original contract. After that, we enter into a new contract to extend. Am I right? Okay. So tell me, how will you cancel the first contract?
By selling.
By selling. Selling $50,000 at what rate?
Spot cancellation.
Spot cancellation rate in which market? Forward market, but the spot rate and forward rate will be the same. Okay. Now, once again, sell $50,000. If you are selling $50,000, the bank is going to buy dollar. Will it be the bid rate or the ask rate?
Bid rate.
It will be the bid rate on September 10th. Yes or no? Okay. Tell me, what is the bid rate on September 10th?
66.228.
15, right? Bid rate on September 10th, spot bid rate, correct? 66.15. Correct me if I'm going wrong there, okay? Okay. After this, if I want to extend the contract to September 12, how will I do it?
Buy.
I will buy. So when I buy, will it be bid rate or ask rate?
Ask rate.
Okay. Buy $50,000 at what ask rates? Ask rate, my question to you is, will it be the forward ask rate or spot ask rate?
Forward.
Forward rate for September on September 10th. Okay. Okay. So forward rate for September on September 10th. Forward rate for September on September 10th ask rate. What is the answer you get over here? 66.32. So by the time I do this, the contract will extend to what? September 12th. Now I have to again cancel on September 12th. How will I cancel on September 12th now?
Sell.
Here there is a buy. So here what will I do? I will do sell $50,000. When I sell, the bank is going to buy. Bid rate or ask rate?
Bid rate.
Bid rate at, everyone interact with me. Will it be the spot bid rate or forward bid rate?
Spot.
Spot bid rate on what date?
12 September.
September 12. Tell me, what is the spot bid rate on 12 September?
65.96.
0.96.
Spot bid rate on 65.96. But friends, here there's one more twist. At 65.96, there is an exchange margin of 0.1% told in the question. Am I right? Okay. So now tell me, whenever you have a bid rate, buying rate, what will you do with the margin? Will you add the margin or deduct the margin?
Deduct the margin.
When I buy, they are paying money, they will deduct the margin. We learned this in an earlier question. Correct. So tell me, what is 65.96 minus 0.1 percentage? 65.89 into 50,000. So do you get the answer as 32,94,702? Am I right? Okay. Now listen. Here we have a difference. We have a difference between this buy at 33,42,000, sell at 32,94,702. What is the difference? Can you tell me?
47,298.
Approximately 47,300. Am I right? Correct. This is what we call it as exchange difference. And down whatever difference you get over here. Can you tell me how much is the answer that you get over here? I think you make a loss of 8,500. This is what you call it as swap loss. So friends, I told you there are three types of charges. Charge number 1 is exchange difference. Charge number 2 is swap loss. Charge number 3 is what? Interest on outlay of funds. So 2 are covered over here itself. Can you write down this in your books now? I will slow down, draw the entire diagram, enjoy the beauty of this entire diagram. We will discuss it and only then I will proceed forward. This is an atom bomb question, friends. Beyond this, nothing will come in your exam.
Sir, I have a doubt, sir.
Yes, tell me.
And now it is there is any disturbance, sir? No.
No, it's absolutely fine. I think you kept the phone near to the fan or something earlier.
No, sir.
No?
Okay, fine. No, yeah, sir. Actually, in that you have reduced the margin, right? But why we are reducing the margin? Like sell $50,000 at
Because
65.
see, we have learned about the buying margin and selling margin in one of the earlier questions. Do you remember that? See, we'll just check you, show you that. See, do you remember this question, margin for buying and selling?
Yes, sir.
And I had given you a concept also, while buying will reduce the margin because they have to pay money, and while selling they will add margin. Do you remember that?
Yes, sir. Yes, sir. Yes,
Same
sir.
way here also, when the bank is buying, bank will reduce margin, and when the bank is selling, bank will add margin.
But on September 10th, we haven't done anything like
Exactly. I will come to that part. Maybe I'll clarify for you now itself. Others are still to understand that, because September 10th, is it a normal transaction or a backdated transaction?
backdated
It is a
transaction.
special adjustment transaction done for the purpose of this cancellation. Am I right?
Yes, sir.
So for doing that, again they ask a margin on top of that, will be too much of harassment. So they don't ask that.
Okay, fine.
Now,
Thank you,
since you
sir.
have come here, I'll ask you one more doubt. 66.84. Okay. Even here, aren't they supposed to, less margin or do something?
That is forward
Yes.
rate.
Come again.
Forward rate, no, sir. That is.
That is, yeah, even forward rate can have buying and selling margin. Nothing wrong in that.
It's
Already included, maybe.
It is the contracted rate. Like we spoke in the earlier question, you had a contracted rate is after considering buying margin and selling margin. Same way, they have very clearly used the word that it's an exchange rate of 66.84 means it is assumed it is after including the 0.1% commission. Okay.
Okay, sir. Okay, fine.
Yes.
Yeah. Thank you so much, sir.
Thank you. Others, you may have not understood. Draw the diagram. Enjoy the beauty of the diagram. We will discuss again.
So why we are not calculating exchange gain or loss between buy and sell of, the 66.84 and 66.15?
Do it like that also. Ultimately, you get the same answer. See, I have taken 66.84 and 66.65.96. Correct? You are saying I take 66.84 and 66.15. I'll take it as one tranche. And second tranche, I will take 66.32 and 65.96. Am I right?
Yes, sir.
Do it like that, you'll get the same. Total outcome will be the same. Only thing will be they have termed one thing as exchange difference and one thing as swap loss. That concept will not be applied there. That's all. But total loss, you will get the same.
Okay, sir.
Try it out.
Sir,
Yes.
sir, I have a small basic doubt.
Okay.
Sir, what is the difference between spot rate and the spot bar September rate given in the question?
Spot bar September is the forward rate for September on 10th September.
Okay.
This is a spot rate on 10th September. So this is a rate on some other date. It is not the rate on 10th September. It is only the contracted rate today executed on a future date in some other date. It can be 15th September, 17th September, 25th September, anything. But contracted on what date? 10th September.
Okay, sir. Thank you, sir. Thank you so much.
Thank you so much. Please write down, friends.
Sir, so irrespective of whether a transaction is a spot transaction or a forward transaction, exchange margin is leviable, right?
Yes, correct.
Okay. Sir, I have a doubt.
Yes, tell me.
On September 10th, you have written that sell $50,000 at 66.15, right?
Correct.
That is a backdated transaction that is happening on September 12th.
Exactly. Backdated transaction happening on September 12th, but happening as if it is going to happen on September 10th. That
Oh,
is the
so that
meaning of
is why,
backdated.
okay, that is why we are using September 10th spot rate.
Exactly. So had that person come on September 10th, he would have done this.
Okay, okay, sir.
Got it?
So that is also conducted in this only forward market. That is not in the real market, right?
Yes, cancellation happens in the forward, but the
market.
forward rate and the spot rate are exactly the same.
Okay, sir.
Got
Then
it?
the buy transaction is on the real market and also on September 12th is also on the real market.
That buy 50,000 at 66.32 is also a backdated transaction done so that you can extend it to September 12th. On September 12th, what is happening is the only real transaction.
Oh, okay,
That's
sir.
also forward. That's also done to cancel the buy 50,000. All are
Okay.
forward transactions only.
Except
Okay.
that September 12th transaction.
Even September 12th is a forward cancellation transaction. This buy, see, now you have a buy over here. In order to cancel this buy has happened in the forward market. This sell is happening in the forward market to cancel this buy.
Okay, sir. Okay,
We
sir.
learned sell forward, buy forward, sell spot. Am I right?
Yes, sir.
The sell spot will come only when there is execution. Right now, we have only done cancellation. So if you look at the question, there are three parts. If you cancel the contract, if you execute the contract, if you extend the contract. Okay. Now we have only done what? We have only done cancel the contract.
Okay, sir.
Afterwards, when I do execute, I will show you how we will do in the real market. Okay.
Okay,
When you
sir.
do extend means again you will enter into a forward contract only. All
Okay,
right.
sir. Yes, sir. Thank you.
Thank you.
Sir, why did we take that 66.32?
Where is 56.32?
Buying $50,000 at 66.32.
Yeah, that is to extend the contract to September 12th.
Hello, sir, that 66.32 rate.
Right. Okay, I'll explain to you. Interact with me. Okay. I am on September 10th. I want to extend it to September 12th. Okay. So what will I do? I will take a spot rate or a forward rate contract.
Forward rate.
Forward. Today I'm on September 10th. I want to extend my contract to September 12th. So I will buy $50,000 at a forward rate. Am I right?
Okay, sir. Forward rate. Okay.
Forward rate for September on September 10th.
But actually, we are on 12th September, right, sir?
But this is a backward transaction happening. So we have to imagine we are on September 10th. Imagine we can do time travel. We can go back.
Okay. Okay, fine. Okay, sir, I
So
understand.
now I am on September 10th. So if I am on September 10th, what will I do? I will extend it to September 12th. Okay.
Oh, okay. So at that date, the ask rate 66.32. Okay.
Yes, exactly.
Sir, if it is
Tell me.
that instead of 66.15, if the rate is more than 66.32, then he'll get swap gain, no, sir. Then also bank will not charge margin.
Now here bank is trying to punish this fellow. Am I right? So will the bank ask him to go do backward transaction? You have made profit. Take this money also. Loot me completely. First of all, you didn't come on time. Now take my money also. Will the bank do like that? No. If it is gain, bank will not give you the gain. If it is loss, bank will take that loss from you. Okay, that is the meaning of the word swap loss. They never use the word swap gain or loss. What is the word used over there? Swap loss.
If it is gain means they'll not set off with that exchange loss.
Exactly. It will become zero. Gain means it will be taken as zero.
Okay.
Right? Arjun, now your question is it allowed to do backdated transaction? No, Arjun. But this is done to punish the customer, and the banking is allowing it to do it as a special case so that the customers understand the value of this entire thing. It is allowed under FEDI rules.
He'll get mad. Sir. That is also punishment.
That is a big punishment. Afterwards, he will never do this. He will say, let me suffer all the exchange gain or loss. He will tell, I can sleep peacefully like that, better than sleeping like this. Okay, friends, are you all done writing this? Can I give you the notes on this one now? Okay. I'll give you the notes one by one. Point number one, you can write down below this. Exchange margin of 0.1% will not apply to July 10th transaction because it is assumed to be the contracted rate. Next point. Exchange margin of 0.1% will not apply to September 10th transaction because it is a backdated transaction. I will give you one more point over here which will be used later on. Exchange margin of 0.1% will not apply to interbank transaction also. Will not apply to interbank transaction also. Okay. Swap loss will be charged from the customer, but swap gain won't be given to him. These are the important points. Can you write down?
So can't able to view the first line, sir. Can you please scroll down?
Arjun, if not allowed, then what will happen? It is allowed. If it's not allowed, I don't know what we can do. As of now, it is allowed, so we don't have to worry much about it. All right, friends. Are you all done writing this? Are you all clear with this part? Anybody not done, let me know, okay? I'm going to the next one. Friends, there are 3 types of charges. What is the first one I told you? Exchange difference done. Swap loss done. What is the last one? Interest on outlay of funds. So now we have to do the last part. Interest on outlay of funds. Everyone tell me, who is this? He is a tall customer. This is the fellow who delayed and making your life miserable. Let's put him in a box. So, okay, this is okay. All right. Now tell me, what is this? This is a tall Indian bank. And what is this? This is a tall US bank. Okay. One moment. Okay. Now, shall we do it? Tell me, what is the first date they have told over there? 10th July. Correct? On 10th July, what is this customer doing with the bank? He is buying $50,000, correct? Okay, maybe I'll draw one more line in between. I'll take a red ink pen. And I will draw a line in between so we understand whose transaction it is. Okay, right. Okay. So what is he doing? He is buying $50,000 at what price?
66.84.
66.84. So what is the bank doing with him? Sell $50,000 at 66.84. Am I right? Now, friends, they have told the bank has covered up their transaction at what price? 66.68. How will the bank cover its transaction? This is State Bank of India. This is the US Bank. How will the bank cover up its transaction? Will it buy dollar or sell dollar?
Buy the dollars.
It will buy $50,000 at the rate of what? 66.68. Okay. Now listen carefully. He sold at 66.84, buy at 66.68. He will make some gain or loss. But is the bank worried about the gain or loss? No. What is bank worried about over here? I should not have an open transaction. Am I right, friends? Now, what has happened? All this has happened ideally on what date?
July 10th.
July 10th. I'll put that over here, July 10th. After that, this fellow was supposed to come on September 10th. Am I right? But did he come on September 10th?
No.
If he doesn't come on September 10th, will State Bank of India call US Bank and tell, see US Bank, my customer hasn't come, so even I will not come to you? No, bank has to fulfill its transactions. Am I right? So here I'll write down, okay, customer did not come. But can the bank stop by fulfilling its promise? No. So if the bank had done a buy on July 10th, on September 10th, what is the bank supposed to do? The
Sell.
bank is supposed to
Sell.
cancel this transaction. Am I right? Correct. How will the bank cancel this transaction on September 10th?
Sell.
Excellent. Sell $50,000 at what rate? Spot rate or forward rate?
Spot rate.
Spot cancellation rate.
Cancellation rate.
That rate will be similar to the
Okay.
actual spot rate. Will it be the bid rate or will it be the ask rate?
Ask rate.
Bid
We are
rate.
selling, SBI is now the customer. SBI is selling, US Bank is buying it. So US Bank point of view, what is the commodity now? Dollar. So will it be the bid rate or the ask rate? It will be the bid rate. Are you all clear with that part? Spot bid rate on September 10th. Can you tell me what is the spot bid rate on September 10th?
66.15.
Now tell me here, will exchange margin of 0.1% come over here? No. Why? Bank are brothers. You don't charge margin from brothers. Interbank, no exchange margin. Everybody clear with this part? Now tell me, here what will happen is, listen carefully. Buy 66.68. Sell 66.15. So due to this, here the bank has made a loss. Bank is not worried about loss, but this loss happened because the customer did not come. Had the customer come, this loss wouldn't have happened. Now tell me how much is 66.15 minus 66.68?
0.53.
Into 50,000 will be
26,500.
This loss has come because the customer did not come on September 10th. But when did the customer come to the bank?
12
September 12th. So on September 12th, what did the customer do? Customer sold $50,000 at some particular rate. All right. So what happened? Loss of 26,500 got nullified on September 12th. But ideally, this loss happened on September 10th. 2 days, bank suffered because of the customer. For this 2 days, bank will charge interest from the customer. So now tell me over here, if you see, what is the interest rate told in the question?
12% per annum.
12%.
So on this 26,500, 12% for 2 days, extra bank will charge. How much is that coming to?
17.42.
2.96.
How much?
17.42.
13.42.
Approximately 17.5 rupees. Okay. This is what you call it as interest on outlay of funds. Draw this diagram also in your books, friends. Beautiful question. And this question came in November 2016 examination.
So the 26,500 will it be covered from customer on 12th September?
Ideally, what happens is 26,500 loss will come if the customer permanently did not come back to the bank. Am I right?
Yes.
Here the customer came back on what date? September 12th. So on that date, the loss got nullified.
But he has to make payment to US Bank also on 10th September.
Come again?
He has to make, SBI has to make payment on 10th September to US Bank. No, sir.
Exactly. So how many days gap is coming in between?
2 days.
That 2 days interest they will charge.
Will SBI make the payment to US or not?
SBI is selling dollar, right? Yeah, SBI will make payment to US, correct. 26,500 of loss, SBI will make to US bank. What you said is absolutely right, okay? But suppose the customer had come on September 10th, even then that loss was coming, yes or no?
Sir.
It was coming, but what would have happened? At least from customer we got the money. My rules is what I want to have a zero position, outstanding position. So whether I make gain or loss is not relevant, but because of customer, I had to make loss for 2 days waiting for him. I will punish him for that. Whew. Are you clear, Satya?
Yes, sir.
This one question will make your life miserable. 1 hour is over and we are only at the first working note. We have 2 more working notes to do. This question came for 12 marks.
Sir, one doubt.
Are you all done?
Sir, one doubt.
Yeah, tell me.
We are since it is interbank transaction, we are seeing that the commodity from US bank. Generally, banks will make transactions now, sir. Then, from whom point of view we have to see that?
When we draw the diagram, one simple term, whoever comes on the right side, we have to think from that fellow's point of view. Now, in my example, customer, bank comes on the right side, correct?
Since both are banks, I'll interchange.
Okay, I will give you another way. Who is going to which bank? That way you can track. Here, SBI is going to US bank. Am I right?
Yes, sir.
Customer normally goes to money exchange. Am I right? So, money exchange is the place where the transaction happens. Here, for covering a position, SBI is going to US bank. So, when SBI goes to US bank will provide its codes.
Yes. Yes, sir.
Sir, yeah, on September 12th, $50,000 was sold by the customer, right, at the rate of 66.15, right?
Correct.
Yeah, actually, you didn't follow.
Sorry, wait, I didn't follow. Can you repeat? Okay.
On September 12th, yeah,
But
66.15.
the rate is
66.15.
no, it is 65.96, right?
Oh,
65.96 minus 0.1 percentage.
that back date.
Backdate part we will not consider here.
Oh,
That you will see there will be 2 more lines. Sell again, buy again, and then sell again. That's not required here. Okay.
okay. So along with this, he should
Yes.
also pay the interest of
Yes.
17.50. Yeah, okay. Thank you.
Sir, I have a doubt. On September 10th, you said that SBI will pay amount to S Bank, right? But they are selling $50,000. Then how they will make payment of 26,500 loss?
No, that's a loss. See, these are forward transaction. Forward transaction is real or imaginary.
Imaginary.
So buy is imaginary, sell is imaginary, gain or loss is
Real.
here you make a loss of 26,500.
Oh, okay. So they are ideally paying the loss amount to Yes Bank.
Exactly. Not a Yes Bank. It is US Bank. I think I have
Okay,
not written it properly. I was confused. Which is this Yes Bank? It is US
Sure.
Bank, United States of America. Okay.
Yes.
All right. Fine, friends. Are you all done writing this? Yes, Saraswati, you need a break. Today, Satya has forgotten the break. She's enjoying this question too much. All right. I'll just give you the logic of this and I'll give you a break. Otherwise, the logic flow will be gone. Can I write down the logic? Write down. Okay. Bank had bought $50,000 on July 10th, which has to be cancelled on September 10th. Okay, full stop. On September 10th, even though customer did not come, bank has to cancel its transaction and it made a loss of 26,500. This loss would get nullified on what date? On September 12th, but for 2 days, bank will charge interest from the customer. Can you write down this? Then we'll take a break.
Sir, one doubt. Sir,
Yes, tell me.
can customer directly enter into forward contract with the US Bank instead of SBI Bank so that he can save that
Wait,
profit?
come again.
Can customer directly enter with US Bank the forward contract?
No, wait. If customer in the beginning only should go to the US Bank. SBI should never be there in the picture. Customer
yes.
is going now. Satya, you are in India. You will not have access to US Bank yourself. You are only going to the Indian Bank. Indian Bank, to cover up its position, is taking a position with the US Bank because we are dealing in dollars. If you are dealing in pound, they will deal with the UK Bank. If you're dealing in euros, they will deal with any of the European countries related bank. Are you getting my point? Okay.
Generally, I can open account in foreign banks, sir.
Yes, then you enter but you cannot sit here and do a forward transaction with a foreign bank.
Okay.
You got it. Okay. So maybe you can open a dollar account, but dealing in forward dollars, not possible. RBI will not allow.
Okay.
All right. Yes. Are you all done writing, friends? So we can take a break.
One more small doubt, sir.
Yeah.
So if on September 10th, if the customer had come also, the bank would have made a loss of 26,500.
Correct.
Then in such case, how will the loss of 26,500 get nullified?
Bank will never ask back that money because bank will correspondingly make some gain here. See, when what happens to the customer is bank is buying at selling at 66.84. Correct. Bank will buy back at 65.96. So if bank is making a loss there, bank will make a gain here.
Okay.
Even if bank doesn't make gain, what is the purpose over here? Bank should never have open position. FEDI rule says the moment you buy, you are supposed to sell. Gain or loss, no problem. Customer money is what you are using. Don't use it for speculation. What if tomorrow loss goes up to the next level?
Okay.
Are you
Like
getting
that,
the
they're
point?
making a
So that loss, bank is ready to suffer.
Okay, sir.
But 2 days is not bank's mistake. That is why they're charging them. Okay. All right, friends, take a break. Think about this question. After that, after 5 minutes, we'll proceed with the next one. Ansa, you want the previous page? You mean this page, Ansa? This one?
No, sir. The last one.
Okay. I'll keep it like this and we'll take a break.
No,
Okay.
sir,
See you
the
after
last
5
page.
minutes.
Sir,
Yeah?
the last page. Not this
Last
one.
page, is it? Ansa, you said previous page. Okay.
Sorry, sir.
Please write down. I'm giving a 5 minutes break. We'll get back after 5 minutes. Friends, shall we start? I believe all of you are back. Okay, I'm starting with the next part. All right. So friends, I'll now give you all the answer. So we'll write down one by one. Next working note. Total cost of cancellation. And that point number A will be what? Exchange difference. Point number B will be what? Swap loss. Point number C will be what? Interest on outlay of funds. From this, you will get the total cost. Okay. So now tell me, how much is the answer you will get? What was the exchange difference that we found out here?
47,300.
Okay, tell me the numbers. Okay, 47,300. Then other one is what? 8,500. And the last one was how much?
17.5, 50 rupees.
17.5 rupees. Correct. So when you add up all these things, what is the total that you get over here now?
55,817.5.
55,817.5. Can you write down and finish it off, friends? I believe you're all done writing this, friends. Okay, so we are done with this part. Friends, we are done with the first part, that is cancellation of the contract. Next one, they are asking for execution of the contract. Okay, so I will write down over here, next working note, total cost of execution. Friends, execution means what were the 3 steps we learned? Sell forward, buy forward, sell spot. So when I do sell forward and buy forward, ideally what am I doing? I'm cancelling the contract. Yes or no? After cancellation, I enter into execution in the spot market. So I'll write down over here. Point number A will be cancellation in forward market. This we have already done over here, friends. So what is the answer you get? 55,817.5. After this, we will execute. Now listen carefully. Here, it's an importer. What will the importer do? Will he buy or will he sell dollar as an importer?
Buy dollar.
Buy dollar. Now on September 12th, he wants to execute the contract, means he will buy $50,000 on what rate? Spot rate or forward rate? Buy $50,000 on September 12th spot rate, because it's a spot market. Am I right? This is what we call it as execution. So my question to you is, will it be the bid rate or will it be the ask rate?
Bid rate.
We are buying, the bank is selling.
Ask
What will be the
ask rate.
spot ask rate on September 12th? What is the spot ask rate on September 12th?
55.99.
5.99.
65.99. Friends, ask rate plus we have to add exchange margin of 0.1%. Am I right? So do you get the answer as 3,30,280?
33 lakhs.
Oh, sorry.
33 lakhs, 2,800.
2,800. You get the total as 33,58,617.5. Can you write down this in your books now?
Means without entering into one more forward, he's buying dollars on 12th September itself.
Spot rate. That is what we call as execution of the contract. Correct. The real paisa, the real money he has to pay. So he will buy real dollar and sell it, give it to Michelle Obama or whoever it is.
Okay.
All right, friends. Are you all done writing this? Okay. So this is about execution of forward contract. Now I will write down the next working note. Extension of forward contract. Extension of forward contract. Okay. Now, everyone interact with me. How do you extend the contract? First, what we will do? Cancel the existing contract. Am I right? So we have already done the cancellation part. We got 51,817.5. After we cancel, what will we do? We will extend the contract. So now they want to extend it to what date? They want to extend it to 10th November. Extended the contract to 10th November. So friends, now tell me, how will you extend the contract to 10th November? What will you do? You will buy $50,000 at what rate? Forward rate or spot rate?
Forward rate.
Okay, at forward rate for November on
12th September.
On September 12th. Am I right? Correct. So now go and tell me what is the rate on 12th September, forward rate for November. November 12th September. We are buying, bank is selling, it will be the ask rate 66.49. Okay. So at 66.49 plus we have to pay exchange margin of 0.1%. So you get the number as 33,27,825.
83,642.
33,83,642.5. Can you write down and finish it off?
Sir, I have a doubt.
Yeah.
The cancellation of the contract, that will happen as if whatever we have done earlier till 12th September, he will sell that 50,000 considering the margin and all. After that only this execution or extending the contract will happen.
Exactly. So that's what we did earlier also. Earlier also when we learned, it was easy. We learned 3 steps for importing: buy forward, sell forward, buy spot. Correct. That buy forward, sell forward was nothing but cancellation of the contract. Am I right? I'll just show you by writing.
Okay.
Correct. See, what we did was earlier, buy forward, sell forward, and then what did we do? We did buy what? These two things are nothing but cancellation. Correct. This is in the
Yes.
real market. Am I right? Okay.
Yes, sir.
Now, if you are extending, what will you do? Buy forward, sell forward, again buy forward. This is execution. Correct. How did we do extension earlier? First step was buy forward. Then you had sell forward. This resulted in cancellation. Then what did you do? Again, you did buy forward. Am I right?
Yes, sir.
Correct. Same thing we are doing here also. Please write down. One minute. Arjun, why added? Because when we are buying, the bank is selling. So on the sale price, they will add the exchange margin. Are you all done writing this, friends? Okay. So we are done with this entire thing also. Can I go to the next part now? All right. Okay. So I think we are done with this part. Now go and write down the next concept heading in your books. Nostro, vostro. Everyone tell me, which is this country?
India.
Which is this country? What is this? State Bank of India. What is this?
US Bank.
Let us assume State Bank of India has deposited $1 lakh in the US bank. So when you look at the US bank statement, you will have a debit, you will have a credit, and you will have a particulars over here. Am I right? Okay. So now here what we have to do is, okay, when they deposit, here we will say that the balance that will be showing as what balance? Credit balance or debit balance?
Credit.
It will be a credit balance in US bank. Correct? Now we have learned about bank reconciliation statement. Correct? Banks have to do bank reconciliation statement. If we don't do is different thing. Bank cannot avoid bank reconciliation statement. So every day morning, the SBI manager will be giving a call to the US bank manager and he will ask the same thing. Okay. What is the balance of my account in your bank? This question SBI will ask. US bank will give a reply at the same time. He will say, your account in my bank has a balance of $1 lakh. All right. So every day morning, friends, same procedure. Okay. SBI will call. What is the balance of my account in your bank? US fellow will say, balance of your account in my bank is $1 lakh. Next day morning again. What is the balance of my account, your bank? Your account, my bank. My account, your bank. Your account, my bank. They got fed up. Finally, they decided, let us create shortcut words for this so that we can deal with this easily. Like that, they came up with a new word that my account in your bank from now onwards will be called as nostro. And your account in my bank from now onwards, we will call it as vostro. Now, friends, life became very, very easy for the bank managers because every day morning, SBI fellow will call and say, nostro, he will say, vostro $1 lakh. Over. That is how nostro, vostro came into existence. Write down this in your books, friends.
I mean, Vostro is with interest, no, sir?
Whatever is the closing balance, it's not with interest, it is the closing balance. That your account in my bank, that phrase is short form is called as vostro. Okay. Are you all done writing this, friends? All right. Now, friends, I will tell you, okay, whether nostro or vostro, anybody still writing?
Yes, sir.
Okay.
Done, sir.
All right. Okay. Now, friends, when we talk about nostro and vostro, there are basically two types of position. First one is called as cash position. And the second one is called as exchange position. Inside cash position, you have a debit and you have a credit. Inside exchange position, you have a buy and you have a sell. So now, friends, suppose SBI deposits $1 lakh. Okay, cash position means real transaction. Exchange position means you will have real also and you will have imaginary also. All right. So now tell me, deposit $1 lakh in cash position, where will it come? Debit or credit?
Credit.
Now tell me, friends, if SBI has to deposit $1 lakh, first SBI has to purchase $1 lakh. Only then they can deposit. Am I right? So will it be a buy position or sell position?
Buy position.
Buy. Suppose same way, this fellow is withdrawing $20,000. Will it be credit or debit?
Debit.
Debit.
So after withdrawing, what will the SBI do with that $20,000? Will it keep it like that or will it sell the dollar?
Sell.
So now tell me, the moral of the story is, whenever you have a credit, it will be connected with buy. Okay? Or maybe I highlight like this. This and this will be the same. Whereas, wherever you have a debit, you will have a sell. Are you understanding my point? Next one. Sell $50,000 forward. Is this a real transaction or imaginary transaction?
Imaginary.
So it will not come in cash position. It will only come in what? Exchange position. Exchange, will it come as buy or will it come as sell? It will come as sell. This is the logic. Can you write down this in your books now?
Sir, $1 lakh in buy
Yes, once again.
in the deposit row, buy $1 lakh is there, no? Why that is came?
Why? Okay, now I'll tell you. Am I speaking to Satya?
Yes, sir.
Satya, I want to deposit $1 lakh, but I'm State Bank of India. Will I have rupees with me or dollars with me?
Please with me.
So from rupees, if I want to get dollar, what will I do? Buy dollar.
Buy dollar.
That's why it's come as buy.
I mean, okay. Exchange means not forward. Okay.
No. It is just two position. Buy position, sell position. That's all.
Okay. This is from whom point of view, sir? It is SBI point of view or US Bank point of view?
SBI point of view. But see, cash position is from US Bank's point of view. See, this buy and sell is from SBI point of view. SBI has to buy dollar, correct? Other
Yes.
one, SBI has to sell dollar, right? But don't create that, it's not that difficult, it's very straightforward. So don't create that confusion. Okay, whenever there is a credit, there will be a buy. Whenever there is a debit, there will be a sell. Keep that
The
rule in
debit
your
bank
mind.
will have two positions means
Yes.
then I thought this is these two positions are in same bank. That's why I got confused.
Yeah, it's actually the same bank only. It is the Nostro account of SBI will have a cash position and an exchange position.
Okay.
Maybe I'll give you a note below this, okay? Nostro account of SBI will have two separate reports. Okay. The first report is what? Cash position. And the second report is what we call it as exchange position. So normally when Satya goes to a bank, you will get only one bank statement. You will have a debit and a credit because you only have real transactions. But when SBI is dealing with US bank, they will be given two statements. One will be the cash position, other one will be the exchange position.
Then in our account it should be debit, no sir. Deposit.
In our account, no. See, when Satya, when you deposit 1 lakh in any bank, you get a statement, it will be credit balance, right?
Yes, sir.
Correct.
So, sir, exchange position is like to deposit $1 lakh, I need to buy $1 lakh. So it is
Exactly. Exactly.
okay.
You want,
And
I'll give you
also,
that
while
note also below. I'll give you that note also below. Okay.
yeah.
In order to deposit $1 lakh, I should initially buy $1 lakh. In order, okay, then if I withdraw $1 lakh, then I will sell $1 lakh. Okay, please write down.
Thank you, sir.
I'll get some water and come back. Are you all done, friends? Many are still writing. Let them finish. I believe you are all done writing this, friends. Okay, I'm going to the next part now. So now, once you are done with this write-up, I will take the theory part. There is a lot of theory written over here. I want you to read through this theory. Okay, as I already told you, Nostro we learned, Vostro also we have learned. There are two position, cash position and exchange position. Okay, down, do you see this theory? Purchasing a bill, sell TT forward. I want you to read through all these things and understand this, after which I will explain these points to you. Once I explain this point to you, we have only one question in the study material. We will do that question and we will pack up with the entire chapter of international finance conceptual part. Please read through it and try understanding it on your own.
Servant out.
Yes, tell me.
If the customer buys or sells buys or sells dollar from SBI, then in SBI books it is cash position or exchange position, or it is not a
Sorry,
position.
1 second, I didn't understand.
If the customer buys or sells dollar from SBI,
Customer buys from SBI, it is only a real transaction. Am I right?
yes.
So that is cash position.
Okay.
I go to a State Bank of India with real 1 lakh rupees. I give 1 lakh rupees and I take real 1 lakh, or let's say $2,000 or $1,000. That is real transaction, correct? So real transaction will come as what? Cash position. Suppose I enter into a forward contract with State Bank of India.
Exchange position.
Exchange position.
So here these two positions are used only for dollars. I mean, whether
Yes.
it is with the customer or with the US bank.
Here, SBI becomes a customer and US Bank is the bank over here.
Yes.
Because SBI has opened an account in US Bank. Am I right?
Yes, sir.
Got it? Okay. Friends, what I'll do now is, let us discuss this. Purchasing a bill. Friends, have you heard about bill receivable and bills payable?
Yes, sir.
Okay. What happens in case of bill receivable? When you purchase a bill, I'll just put up over here. We have two things, debit, credit. Then you have buy and then you have sell. Cash position, exchange position. Okay. So now everyone interact with me. When you purchase a bill, all right, it is a real transaction or imaginary transaction? Will the bill get executed and real money will come or no? It will come only later on. Am I right? So originally it is going to be only a exchange position. Only when the bill actually materializes into rupees or amount, that is the time when it will go to what? It will go to the exchange position. That is the same thing they would have given over here. Just read through this. Buy action, exchange position. Purchasing a bill. Because it's a bill receivable. Only when it is honored and payment is made, it will affect your cash position. Okay. Second one, sold forward TT. What is the full form of TT? Telegraphic transfer. It is basically something like, online payment that you do. Forward means what? Is it real transaction or imaginary transaction?
Imaginary.
Will it come in cash position or exchange position?
Exchange position.
Buy or sell?
Sell.
Okay, next one. Forward purchase contract cancelled. Now tell me, forward purchase contract cancelled means forward contract is what, real or imaginary?
Imaginary.
Imaginary. Originally it was purchase contract. So originally it was buy or sell?
Buy.
Buy.
Buy. Now it will become what? It will become
Sell.
Sell. Correct? So it will be coming over here. Look at this. Sell action in the exchange position. All right. Next one is called as remitted by TT. Remitted by TT means made payment to customer. That is when you remit money. All right. So when you make payment to the customer, is it a real transaction or imaginary transaction?
Real transaction.
So where will it come? Cash position or exchange position?
Cash position.
It will come in cash also and it will come in exchange also. So real transaction will come in both the places. Here it will come as what? Debit or credit. When you make payment, what will happen? Your balance will come down or will your balance go up?
Come down.
Balance will come down. So debit or credit?
Debit.
Corresponding here it will be sell. Because debit and sell are always interlinked. Look, debit and sell. Can you write down till here in your books?
Why sell, sir?
See, when you have to make payment, you have to withdraw money and then only you can make payment. Am I right?
Yes, sir.
So once you withdraw money, you will withdraw dollars and then what will you do after withdrawing dollars? You will sell dollar.
Okay.
Just keep this rule in your mind. Debit means always sell. Credit means always buy. Okay.
Sir, can it be interpreted like spot transaction all comes in the cash position and forward and futures will come in the exchange position?
No. Cash transactions will come in cash position also, exchange position also,
Okay.
and forward contract will come only in exchange positions.
Oh, cash cash position can come also in exchange position. Is it, sir?
Yeah, whatever comes in cash will also come in exchange. But what comes in exchange will not come in cash.
Okay, okay, sir, fine. Thank you.
Thank you.
That this bills receivable or payable is with whether bank is, I mean, bank's receivables or customers' bills receivables.
The bill receivable is a instrument that the bank is issuing. Okay, you remember we had learned the entries in the books. First it will be party account debit to debtors account debit to sales. Then bill receivable account debit to debtor. So what happens is we get a bill from the bank, based on it bank will pay us money. So we discount the bill. The moment we discount the bill, that's CPT accounting you must have learned, right? See, you have a debtor. Okay, Satya has sold goods to Sia. All right. So while Satya is selling goods to Sia, first entry will be Sia account debit to sales. Sia does not have money. Sia will give you a bill. Okay, take this bill. Okay, so this bill can be encashed after 3 months. So next entry in your books will be bill receivable account debit to Sia. So now BR is there in your books, but that money you will get only after 3 months.
Yes, sir.
Then if you want, you can discount the bill. So there was another entry for that. Bank account debit, discount charges account debit to bill receivable.
That is okay.
Okay, all that process is there. So that bill is an imaginary transaction. You don't get real cash. Okay.
Okay. So I mean, whenever Sia writes bills receivable or bills payable, then he'll inform with the bank also. Then they'll enter those transactions in their position, respective position.
Yes, you buy a bill. So that bill, when you're buying it with behalf of a bank. The bank is the one who's actually who gives a bill. Only a bank can issue a bill.
Yes.
A customer cannot generate their own bill receivable. No, Sia cannot come and make her own printout. Take bill, legally valid. No, bank makes a bill. And how will the bank make the bill? Based on the credit worthiness of the party.
Yes, sir.
Okay. Are you all done writing, friends?
So this is this reports maintained by bank, whether it has as per, I mean, control policy or is compulsory under RBI rules.
No. This report is anywhere, whenever there is a transaction happening, bank has to keep records of everything. Even 1 rupee the bank gives you or you pay to the bank has to provide the account. It's all Finacle. Actually, Finacle is one of the software used by the bank. It's all automated. So whatever transaction happens, it will happen. The only thing is how the reports are coming to you. That report will come to you in 2 parts. One is cash position, other one is exchange position. All right. So now normally when you go to a bank, you get only one statement. Why? Because normally with banks, we enter into only real transactions.
Okay, that exchange position report also given by US bank.
Exactly. US bank will give the exchange position report.
Okay. Okay.
All right. Yes. All right, friends. Are you all done writing till here? Now we will go to the last one more part. Draft on Zurich cancel. This is little tricky. Please read through this in detail. I will write down the whole process and then only we will conclude this. Okay. Draft on Zurich cancel. Please read through it. Time's up. Draft on Zurich cancelled. What is Zurich? Friends, Zurich is a place in Switzerland. Okay. It is, I think, the capital of Switzerland, if I'm not wrong. It is a place. Cancelled. Okay. So there are two things over here. Step number 1, draft on Zurich issued. Okay. So everyone interact with me. If a draft is issued on Zurich, will it be a real transaction or imaginary transaction? Draft means DD. DD on Zurich issued. Is that a real transaction or imaginary transaction?
Imaginary.
Imaginary, why? Because real cash is not going. Only a DD is given. DD has to be executed. Only then it becomes a real transaction. So now tell me, if this is an imaginary transaction, will it affect the cash position or exchange position?
Exchange position.
It will only affect your exchange position. So what happens is, draft on Zurich issued means, if this was a real transaction, listen, if this was a real transaction, will it affect your debit balance or credit? Debit or credit, where will it come?
Debit.
It will come on debit, because the moment you issue a draft, DD, your bank balance will come down. So I'll write down, when DD is issued, bank balance comes down, hence debit position, or we can tell, hence cash position will have a debit. All right. So correspondingly, what will the exchange position have? Correspondingly, if it is debit in the cash position, you tell me, friends, what will come in the exchange position? Will have?
Sell position.
Yes, it will have a sell position. That's what a debit means, sell. Credit means buy. Am I right? So this is the explanation. Based on this, here you will have a sell position. All right. So now everyone tell me, step number 2, this draft has got cancelled. So now tell me, if this draft has got cancelled, what will be the action that will come over here? If original was sell, how will you cancel it? What position will you take?
Buy position.
You will take a buy position. Can you write down this in your books now?
Sir, these will be asked as a theory or how we'll apply it, sir.
Sorry, I didn't follow your doubt. Can you repeat once again?
It's not a doubt. I'm just asking you whether this will be asked as a theory question or it will be.
It will be a practical problem-driven question. That's what we are going to do next. Okay.
Oh, okay.
But until you understand the logic, you will see what happens is I'll tell you. Most of the books and most of the classes will only give you a by-hearted answer. I want you to understand the logic of what we are doing here. All right. So once you get that grip, it becomes easy for you. Right?
Yeah, okay. Thank you, sir.
So I'm spending time on the conceptual part.
Yeah, okay, sir.
So when the draft is cancelled,
Yes, tell me again.
so when the draft is cancelled, it will be a buy position. And will we have a credit in the cash position?
No, because you never had a real transaction. You entered into a draft and the draft got cancelled. Am I right?
Yeah. But when it is issued, the cash position is getting affected. Right?
Come again, please repeat.
When it is issued, when the draft is issued, the cash position is getting affected, right? You'll have a debit.
No. I'm just saying you don't have a debit. I'm just saying that had this been real, okay, maybe I'll put it that way. When the DD is really issued, okay, issued in future, not now. Really issued in future, that time it will affect the debit. So if it is debit in cash, it will be a sell position in the exchange part.
Okay.
I'm just trying to tell the logic of how we got the sell. That's all. It's not really issued.
Okay.
So everyone, please update this part. Okay. All right. Yes. Ooh, so I think we are done with the conceptual part. Are you all clear so far? I think many are still writing.
Show the previous page.
So then it will be an imaginary transaction, is it?
It is an imaginary transaction only. Draft on Zurich issued is an imaginary transaction.
Okay, so fine. Thank you.
1 minute.
Deepika, you want the previous page, is it? 1 minute.
Thank you, sir.
Thank you. Are you all done with this? Can we do a problem now? Okay. Let us do a problem on this one now. Okay. Everyone take this question. All right. I have given the solution here. Don't look at the solution. They have given the balance in Nostro account credit. Okay. So that is credit balance is given. Opening position overbought. Overbought means what? Is it buy or sell? Buy. All right. Then they have to let's interact and do it one by one. Okay. Then I'll give you time to write down. Purchased a bill on Zurich. Is it cash will it come in the cash position or exchange position?
Exchange position.
Okay, let me rephrase my question. Purchased a bill on Zurich. Is it a real transaction or imaginary transaction?
Imaginary.
Imaginary. So will it come in cash position or exchange position?
Exchange position.
Buy or sell?
Buy.
Buy.
Buy. Are you clear with that part? Next question. Sold forward TT. Real or imaginary?
Imaginary.
So cash position or exchange position?
Exchange position.
Buy or sell?
Sell.
We have done that also. Third one. Forward purchase contract cancelled. Real contract, real transaction or imaginary transaction?
Imaginary.
So exchange position or cash position?
Exchange position.
Buy or sell?
Sell.
Excellent. Remitted by TT. Real or imaginary?
Real.
Real. So what position will it come in?
Debit.
Cash position and exchange
Both.
position.
Debit.
Cash and exchange. Excellent. So it will come in cash as what? Debit or credit?
Debit.
Debit. In exchange, it will go as?
Sell.
Sell. Last one. Draft on Zurich cancelled. What will it come? Cash or exchange?
Exchange.
Exchange. Only what will it come there? As?
Buy position.
Buy or sell? Buy, is it? Yeah, buy position.
Buy.
Did you understand the logic now? This was the question. I only decoded this question over here with full logic. Okay, and this logic is not there anywhere in your textbook. They have just solved it and left it just like that. Okay, so now this is exchange position. Can you write down this in your books on your own?
Sir,
Yes.
one basic doubt, sir.
Ask all doubts. That is why you're attending the class. Tell
What
me.
is the meaning of draft and Zurich cancelled?
Okay, draft means demand draft. All right. Satya, you have applied for ICA exam multiple times in the inter exam or foundation. You would have done, right?
Yes,
Did you
sir.
take a DD?
Acknowledgement.
Do you take a DD for the ICA?
Acknowledgement they'll give, sir.
No. When you how do you apply for the exam? Don't you have to take a DD?
My sir applies, sir. I did not apply.
Your sir applies. That is the problem. You should take one DD once, then you will understand. When you take a DD, your sir will do DD application, everything for you.
I don't know, sir.
You have a wonderful sir then. Okay. Now, when you take a DD, okay, I have a photo somewhere in my phone. If you want, I'll share that photo in the WhatsApp group. All right.
Means when I deposit in bank, they'll give one DD to me.
Yes, you have to pay 500 rupees or let's say 1000 rupees as exam fee. They will give you a DD. This
Means
DD
when
you
I
go
pay-
and give it to ICAI. Okay.
Okay.
Once you give it to ICAI, ICAI can encash that DD.
Okay.
All right. That DD, when you give it to ICAI, the real money does not go. Only when ICAI encashes the DD, money will go from your bank.
Okay.
All right. So instead of giving cash, normally they give an account balance and they give a check or something like that to encash the DD. So the transaction from bank will happen only when the DD is materialized.
The concept is okay, sir. Here we are talking about SBI and US Bank, no? In that.
Okay, in SBI and US Bank also, what would have happened is that see, SBI has a bank account in US Bank.
Yes, sir.
It is like Satya has an account in State Bank of India. Same way, SBI has an account in US Bank.
Okay.
So SBI has got money there.
Yes, sir.
SBI can use that money for whatever purpose. SBI wants to issue a DD.
Okay, sir.
You do one thing, you forget about SBI. Think about Satya having an account in US Bank.
The concept I got it, sir.
Yeah. So what happens is when you issue a DD, the bank balance doesn't come down. Bank balance comes down only when the actual DD is materialized.
When encashed.
In cash, exactly. Okay. Are you all done writing, friends? I think you're still writing.
This Zurich is only one example, no, sir?
Zurich is the name of a place. It comes in Switzerland.
Okay.
So they have issued a bill on Zurich. So they have issued a DD towards, maybe they have a separate account in Zurich Bank towards which they have transferred money from the US Bank.
Okay. This is only one example. That's
Only
not
one example. You can imagine Zurich is a person. They're issuing it towards Zurich. Just think like that. It will be clear. Okay. If you're not done, let me know. Okay. You don't need to give the logic. You just have to put the buy and sell. Capital is Bern, is it? So Switzerland, Zurich is only one place in Switzerland, is it? All right. Are you all done writing, friends? Can I go down? Yeah. Okay, I'm going down now. So this was about exchange position. Please finish it off. So net buy, sell, oversold position. And the next one is cash position.
So what does TT means?
TT is telegraphic transfer. It is like Google Pay, online payment.
Okay, sir. Thank you, sir.
Are you all done writing, friends? I think yes, all of you are done. Okay. Yes, I'm going to the next part now. Right. So I think you're all done writing so far. Now the question is not over. We have one small part left. What steps would you take if you require to maintain a credit balance of 30,000 Swiss francs? So 1 minute. I will give a heading called as conclusion. Particulars. You have cash position. And then you have exchange position. Debit, credit, buy, sell. Okay, so first I'll start with the closing balance. So what is the closing balance of the exchange position that we got? 5,000 oversold. So here it is 5,000 in the sell. And cash position is 1 lakh minus 75, that is 25,000 credit. Now what they're asking you over here is what steps will you take if you want to have a credit balance of Swiss francs 30,000? Everyone tell me, right now we have a credit balance of 25,000. How will you increase this to 30,000?
So is it debit or credit?
Wait, it is credit. See, credit balance 1 lakh minus 75,000 gone. So the closing balance is going to be debit carried forward to credit. Am I right?
Okay, sir.
It is credit only. Now this credit balance of 25,000, they want to make it 30,000. How can you make it 30,000? Come on, tell me.
Again, credit.
Here it is 5,000 net oversold. Again, credit. How will you create a credit? Will you borrow or will you deposit or will you withdraw?
By depositing.
You will deposit 5,000. So now what happens? Here it becomes how much? 30,000. Interact with me. The moment you have a deposit of 5,000, that is on the credit side, in the exchange position, where will it come? Buy or sell?
Buy.
So now tell me, here you have a 5,000 oversold position. When this comes, it will become 0. Correct? Now, next question. They are asking one more thing over there. They want an overbought position of 10,000 Swiss francs. How will you create an overbought position? You will buy in the forward market. Now tell me, if you buy in the forward market, will it affect the cash position or exchange position?
Exchange position.
Okay, so it will not affect here. Here it will be 10,000 will come as buy. So automatically what will happen? Your closing balance will become 10,000 over bought. We are done with this question, and conceptually we have completed the chapter of international finance. Can you write down this in your books now? Arjun, all these are online only nowadays. Nowadays, everything is on online. Are you all done writing, friends? Yes. So we are done with this one question also. And friends, ideally, conceptually, this chapter is over. There are no more new concepts. Okay. But we have some beautiful questions. Like question number 20 is there. We have 21. All these are tricky problems. All right. Then you have 22, which is slightly easy. You have a tricky question as question number 23. All these tricky adjustment questions, we will do it tomorrow. Okay. And I don't think tomorrow it will get over. Maybe tomorrow and day after tomorrow also we will do. Maybe. It depends on how fast we can cover these questions. So by tomorrow is what date?
20th July.
Tomorrow is 20th, so day after tomorrow is 21st. Am I right? By 21st, we'll be completing with international finance problem-wise. Then what are we supposed to do? We have to do the study material problems, correct? I will not do that now. After this is completed, these total, how many questions are there? Last question is 29 questions are there. You have to work out these questions 2 times without looking. Okay. Other assignments, you do it later also. Okay. This, if you don't do it now, you lose it. Okay. Do it 2 times, you become an expert. Then I think by August 1st or 2nd, we will be completing everything else. We will be completing the derivative part and everything. Final, we will sit again on international finance and do the study material problems. And with that, we will pack up our entire SFM class. Is that okay with all of you? Right? Okay. Then some students are writing new syllabus who are attending the class over here. For all those students, we'll have a separate planned class. Okay. Maybe a 1 or 2 days session, because new syllabus AFM has got only 1 chapter new. That is different types of capital budgeting. That's hardly a 6-hour or an 8-hour session. We may plan a session accordingly and we will complete that part. And there are some CMA final students attending this class. Okay. CMA versus CA also, there is some differential areas. Exactly those areas, we will have a separate special session exclusively for CMA students. So with that, all the parts will be 100% completed. All right, friends. So shall we pack up our session now? Okay.
1 minute, sir.
Yeah.
I'm not getting the Zurich part, sir.
You're not getting the Zurich part, is it? Okay. You message me, I'll reply and I'll clarify that part to you personally. Okay. All right. So friends, next Monday, we are starting with the mentoring session. Please pass on the information to all your friends. You also join in. So we have a study plan. Weekly assignments will be there. Weekly. After 2 or 3 chapter assignments, exams will be there. And I will come live 1 hour to clarify all your doubts, whatever doubts you have. Okay. So that way, just follow that assignment correctly. November exam you write, you will get through for sure. Because we will create proper checklist. Checklist A, B, C, D. Do that, you will get result. It is a byproduct. Am I right? So just attend that, try following that schedule and complete it. Okay, friends. So I'll see you tomorrow at 8:30. Have a nice time ahead. Take care. Good night.
Sir, I have a doubt.
Yes.
Sir, actually, mutual funds assignment has to be submitted by 28th. Mergers has to be submitted by 7th August. So if we start doing this international finance, maybe we won't be able to do mutual funds and mergers. Is that okay?
I'll change the date. Okay. Ideally speaking, that and all should I see. My original idea was Monday to Friday, whatever I take. Sunday, one day you write down 2 times and finish it off. So ideally, the assignment of portfolio, etc., should have got over long back. Okay. But it did not get over at that time. I gave a longer time because I saw that you are unable to cope up. You have work pressure, everything is coming up, right? Correct?
Yes.
Portfolio merger, etc. Even if you do it later on, there is no problem. I have given allow late submissions. Okay.
Okay.
This one, if you don't do it now, afterwards you open the book, you will feel like you're studying it afresh.
Okay, sir.
So that is where the assignment will help you a lot. And after the assignment, we are having a 10-day marathon also. That time it will be a 2 days, 20 hour, 2 full days. You will become super expert. Go to the exam, whatever question comes, you will be able to attack it. Okay.
Okay, so thank you so much.
Thank you. Thank you so much. Good night, everyone. Satya, I'll message you.
Thank you, sir. Good night.
Thank you.
Thank you, sir.
Good night, sir.
Good night. Good night, everyone.
भैया उससे नारी जो शाम को